Hey everyone, welcome back to the MHP Show podcast. I'm your host, Derek Vickers. On the MHP Show, we talk about all kinds of stuff when it comes to mobile home park investings and all aspects of the business. I got a good friend of mine on here with us today. Before I get into that, I just wanted to make a mention of our new fund. It's for accredited investors only. If you like the idea of this asset class and you don't want to have to deal with the stuff that me and Glenn have had to deal with on a daily basis, and you want us to do all the work, you want real mailbox money and not like the false mailbox money that people tell you as a park owner that you have, because we'll probably talk about that at some point today. It's not really mailbox money. Would you agree, Glenn?
Definitely.
Yeah.
I was afraid to jump on the show to because you have a way of pulling things out of me that I'm like, I can't believe I just said that on a recording.
But yeah, anyways, look, if you're looking to get into that business and you like the idea of this asset class, would love to jump on a call with you. You can go to my website victorycapital.com and schedule a quick call and we can chat about it. So anyways, Glenn, dude, what's up, man? Glenn, Vertical Equity, welcome to the show, dude.
Thanks for having me.
Yeah, I'm excited to have you on. I think this is the second time. And when was the first time?
I feel like I've been on 3 times. I was on the first show, and then we were on like a random live stream, and then now we're on the third show.
We were on the live stream? What kind of live
I was
stream?
on live stream one time with you. Yep.
Hmm. I was going to ask you, I just did the live and I was like, I might message Glenn and be like, why don't you just jump on this live with me and answer some of these questions? But
I was thinking while you were talking, I was like, he should have somebody next to him kind of commenting on what he's saying.
yeah, and be like, Derek, that was dumb. Well, why'd you say that? Like, I
Or
don't
just
agree with
another
that.
experience of something going sideways or positive things that happen.
Yeah. Yeah. Yeah, look, because things inevitably go sideways at certain points in this business. I mean, had you ever had a point in this business where you were almost just like, F this, I'm done with it?
Yeah, I mean, we have a code inspector following us around in our parks apparently right now, and I'm not sure. She I think we finally got her on our good side. She's in Lakeland, so
What's her name?
she's couldn't
Maybe
tell you.
maybe you can text me off.
I don't know her name. I don't know her
Okay,
name, but
okay.
she knows who we are and she follows us around.
Like why?
Well, it's funny because like we just bought both of the parks. It's a friend of ours that one of the parks that we bought, and literally I think they see you start working and they know you're putting money into the park, so then they start seeing that they're actually going to get somewhere by sending you a violation compared to the guy that owned it before that didn't do anything. And
Yeah,
now they see somebody spending money, so then they want to fix things their way, I guess. So
yeah, for sure, for sure. Yeah, and I think what I really was trying to get to in that question, like you were in a different business before this too, right? What was kind of the f this moment where you're like, I'm transitioning, I got to do something more entrepreneurial. Was there something that happened?
yeah, mine was I literally was just talking to somebody about it. I When the doors close and you feel like they're talking about you on the other side and you're just waiting for the other shoe to drop, just finding that passive income or the income to insulate you from not being reliant 100% on that one job.
Mm, mm. Yeah, and I think that there's something to be said by that. And one of the things I actually learned from Grant Cardone, he's like, never depend on one of anything, but only your wife. Like you can depend on one there,
Yeah.
but everything else, like you need to have optionality and things. So you're not you don't have to succumb and get all emotional about the one thing, losing the one thing, right? And
Yeah.
I think it's important. It's just like on deals. If you've got two deals in the pipeline and they both fall out, then you're pissed. But if you have 20 and two of them fall out, you don't care, right?
Yeah. Yep.
So I think it's a matter of just keeping all that up and going. So that was your moment. You were like, I'm done with this.
Yeah, I mean, I would feel defeated a bunch of times. I was working in COVID, I was in sales, and then I converted into like a call center manager. And I was just because everybody went home to work, so now I had
Mm,
to manage their time. And when somebody, we're kind of documenting if somebody took 2 breaks today instead of taking one, or taking an hour lunch instead of an hour and 10 lunch. And then it's like, do I really want to dictate people's lives to this level? And it turned into, just kind of a micromanagement way of management, which robbed my soul at the same time. You
mm,
feel the pressure from your higher ups, and then you feel like you have to hit these metrics that they're telling you to hit, which I understand, but it was one of those things where I just didn't want to do it anymore.
yeah, yeah. See, in my case, like we had metrics and we were crushing the metrics,
Yeah.
and they were trying to tell us that we needed to change stuff. And I'm like, what do you want me to do? Like, I don't
Yeah.
know what you want me to do. I'm not changing anything because we're killing it. So, but I do get the frustration in that for sure. Um, I wanted to ask you. So, on your podcast, The Millionaire Journey, like you're interviewing a lot of millionaires and a lot of successful people. Like, have you learned anything that's like, I don't know, what surprised you the most about like, I guess that's one question. Like, what has surprised you the most from interviewing these people, and like, what are some things that you've learned that you didn't know before?
Yeah, so I can there's a lot of stuff I've learned, but I would say that the one thing I have learned, and I'm sure you've experienced it as well, is that sometimes what we see on social media is not the reality of what's actually happening. What I would tell you about Derek Vickers, though, is he's the real deal. Like whenever I actually hung out with Derek Vickers, and I was thinking, whatever he's doing, I want to do that. And literally, I was like, I'll follow you into the fire, bro.
I
So,
appreciate
and
that.
that was the vibe that I got, because I was like, at first, I was like, maybe Derek's fluffing his numbers or something like that, and then I actually met you, and I was like, oh man, he's got it very well put together. Not a drinker, so he's not going to be a wreck on the side, not going to have debauchery and stuff like that. And then also the operational side, just having a very systematic way of operating. And then I would say that's what I get from being on the podcast, is because me and you met through the podcast, really.
Yeah.
And so then when we go to conferences, I'm able to have like these conversations that I normally wouldn't have normally. So
Yeah. Yeah. No, it's always good. I think, and I try to like, I'm pretty good with connecting with people. And so, like, when I have them on the podcast, I try to like, get stuff out of them.
yeah,
And because a lot of people, I mean, there's people that you see on the podcast and online, and then you meet them in person, and they're like so polished on LinkedIn. And then when you meet them in person, they're like F this, F that, and they're like, I'm like, there's the real person, right?
yeah,
There's the real person. And I like to I just like to be me. I don't know how to be anybody else. Right.
yeah, definitely.
Um, but is there any takeaways that you've had from people that you've had on your show that you're like, man, I could actually implement that. I like that. And, that can change the direction of where I'm going for the better.
Yeah, I actually, the biggest thing is just from putting myself around successful people makes it me know that it's possible. And then what I have found is there's certain people that one I really like is Jeff Everett. I've had him on the podcast a few times. He's actually like a limited partner type investor, but he raises capital with limited partners now. But he's kind of like a key partner guy that would like sign his name on the mortgage to get general partner status. And but when you talk to them, certain people like that, they have very strong systems.
Mm,
They always take time. They care about people. And it's like those are things that are very good qualities that I'd like to obviously have as well. So it's kind of like It's not all about just the money. I think the money comes as long as I really believe as long as you funnel your money towards the right direction, uh, and hang around the right people, I think it just generally falls into place.
Yeah, yeah. When you say flow it in the right direction, like what do you mean by that?
Yeah, so I believe you can only have so many masters. Like it's like if I for me, when I was at my W-2 job, I read a lot of financial information. I thought following the stock market was important. Following, hearing what they say on CNBC, what like today, an example would be like a trade war. Honest, in my opinion, that does not affect me in any way. And yeah, it could, but what am I going to do about it? So I just have to make the best decision with where the money. Is this a good deal or not? Trade wars does not affect if I'm going to make an offer on this, or tariffs and so, anyways, stuff like that. But what I was doing is I was maxing out my 401k, um, and and then I would on my days off on like Tuesday or Wednesday, I'd have like one day off during the week. I would follow around my mentors, and I had
Mm,
one Garrett he's my business partner, and then the other one would be Desmond, who he has about 1,800 pads now, but at the time he had about 600, and I was just following him around and on my days off, seeing what he's doing and just seeing how they work. And I would ask him questions like, "Do you have any money in the stock market or in your 401k?" And they're like, "I no, I don't know anything about that stuff." And it's not like they were and it's not that they weren't. They're very smart people, but you don't have to be the smartest person in the room. You just have to direct your money to the right, like either the right people or the cash flowing assets, lowering your expenses. There's a healthy amount of debt to income ratio that I would look at, and I see that today. Like I was talking to Derek before, is that we have about 650 units, and there's a part of me that just thinks to myself, like, at what point am I comparing myself to Derek? Am I going to be do I want to be at 2,000 units? Or and everybody has their spot. So I see Derek has like a bigger vision, like he's like on his way to 10,000. And but sometimes I have to be in my own lane and say, like, maybe 650 is the right number, or maybe I have maybe a different risk tolerance as well, that I might say, maybe I start investing into more of a fixed income, like debt type thing. And that's kind of what I've been thinking a lot recently. So it's like, you got to kind of listen to what keeps you up at night. And that's for me. I lose a lot of sleep just from worrying for no reason. Like I'll like wake up in the middle of the night worrying about things, and I'll be like, okay, how do I get this to stop? Maybe I need to de-risk a little bit. Maybe I put myself into some first lien debt positions or some promissory notes. That's just been my experience.
yeah, yeah. I know what you mean, and I understand the waking up in the middle of the night like crap. Like what is this? Short answer is I don't know how to stop that. Like,
Yeah, yeah, yeah.
I wish I did. And to your point, and like you're thinking, okay, well, is this amount of units enough? I mean, it all depends on like what you want to do, right? And depends
Yeah.
on your personal goals and targets, right? If that's you got to decide if that's good for you or not. Um, I just for me, I mean, it's just like making an impact, and there's a lot of things that, like I want to help people do, like I would love to like just things that I'm passionate about, like like because the more successful you get, right, you have more influence for good, right? Some people use it for bad, for some people use it for good, but like having an impact on people that have been, in situations like I have with partying all the time, you know, drinking and doing other stuff that doesn't help you get where you want to go. Like if I had an ability to impact those people and like help other people jump out of that trap like I did, like to me, that's pretty cool. And you can do that if you're more successful and more influential. And, I mean, I have a passion for that and kind of helping people through stuff like that. And so that's just kind of a thing that drives me. And so it really just depends on like, hey, what do you want to do? Right? What do you want to do? And then you decide if this is enough or it's not enough. I mean, I think making an impact is a pretty cool thing. And you can do that with more influence. So um yeah, I think it's pretty cool. And again, when you're talking about like, because I had someone else that asked me this question on the podcast, when's enough? And I'm like, dude, I don't know, right? I don't know. And obviously, like I like chasing, like seeing actually what I can do. Like if I look back to 20, in 2020, and I'm like, okay, if I saw myself where I was now, I probably would have thought I would have been further along by now. But if you asked me this in 2022, I'd be like, dang, dude, that was a fast rocket, to jump. So yeah.
I would actually say to compare myself to you. I your experience is that you worked with like some of the best operators to follow, and for me, I was more self-taught. I followed a couple guys that that they were one man operators, and that's who I learned from. But what I would say is that we also, for us, we were like redlining for like a solid year, and at this current place where I'm at, is that I'm just like, okay, maybe we just take a break for a second, get our properties right. We bought, just like we were talking about it right before the call, like that I sent you a deal, and I thought I actually was like, if I was buying deals, that would be the one I would make an offer on right now. And you're like, yeah, I don't know if that's one for us, and
Yeah. Yeah.
and I think that shows from experience and knowing what you're looking for as well.
Yeah. Yeah. I think that's a great point. And like, you know, knowing what you're looking for. Like that's I get messages and questions from people all the time, and they're like, is this a good deal? And I'm like, well, I mean, I don't know. Is it a good deal for you? Like it may or may not be. Like that deal's maybe a good deal for Glenn, not necessarily
Yeah.
for us, because I know exactly what we're looking for and what we're trying to do. Now, when I give my viewpoints and opinions, it's based on like what I think is a good deal, right? But I've got a deal under contract now that somebody was like, well, how are you getting to that number on that? And I'm like, you
Is it
know,
because the number was too low, or is it like that it's
he
like
he thought I was paying too much for it. I think I'm stealing it.
yeah. Well,
So
knowing where to add value. Yeah.
correct. And so that's another thing. Like if you buy, people buy in the middle of nowhere. I don't like that. I know you don't like that.
Yeah.
Um, and but that may be good for them. Um, Yeah, I think there's just that sort of an important point I wanted to make as far as like defining what kind of deals um that you want, because it's gonna help you and save you, instead of just looking at all the deals you can and looking for shit because it's cheap.
Also, a guy that he had helped build 2,000 units for two operators, and he would tell me, he said, the parks you're buying are actually slowing you down from buying more. And he would say like, he was like, when you buy a park like that, it's like you have to slow down before you can start up again. And I think that's what happened this past year. We bought 350 units. Or no, we bought 300 units last year. And it's like there's so much of a mess that I was like, it's not even responsible to take any more investor capital. We got to focus on what we have and make sure these are right before we move forward. So that being said, I could say right now I have enough. In a 6 months from now, everything's stabilized, and I'd say, let's go buy some more. you know?
Yeah, yeah. But what did he say? So he was just basically saying that, hey, because you're buying this value add stuff, it's slowing you down from buying more, essentially.
Yeah, but when we say value add, there's many types of value add.
That's true.
So as a mobile home park, there's multiple levels. You have lower
Yeah.
rents that can be raised, and then you have the whole infrastructure that needs to be redone. Like you're doing a redevelopment. And I can tell you that about 50% of the parks that we have bought is almost like a redevelopment. Like you're
Pretty
going
much.
through and you're having to redo, not like add units or anything like that, but you're really going in. It's because we focus so much on price, and just like with what you're saying, we would say like we want to buy them for 30,000 a pad. And then if it we can get them to 30,000 and then we end up buying some pretty rough parks. And now what I've heard from what you said is like you might be at a higher price, but you already know like, hey, maybe I don't have to spend 20 grand a unit to get it to where it needs to go. Like we're
Yeah.
like, yeah, we got to spend 20 grand a unit to go there, So
Yeah. Yeah. And I think there's probably some truth to what he's talking about there about doing, too much value add because I've experienced that myself. And but I would also say like I don't think I'm in the business yet of buying a 4 cap to turn it into an 8
no,
in 5
no.
years. I mean, like that just doesn't seem that exciting to me.
I
Although I
think
will
that's how you
say,
lose
I mean, I just think you're so susceptible to like,
yeah,
interest rates.
interest rates.
Like you buy at a 5, make it an 8 and exit at a 6. I mean, those numbers are not exciting.
And there's some variable costs that you might have missed, and then it just changes to that 4 that turns to an 8 really turns into a 6, and then you're like, well, that was a lot of work.
Yeah. Yeah, for sure. Yeah, and like so what I'm still focusing on value add stuff because I think there's a lot there, but just I think, a step up in value add. Not like, a park that all the park owned homes are just a disaster, which we do have some projects like that we're looking at, but we also have some where the park owned homes are really nice, and it's going to be like an easier turnaround. Um,
Yeah.
so yeah, I think you're right in saying there's different levels of value add, but I think we'll still do value add for now until we, you know, I mean, I like the really nice stuff, but again, buying it a 4 and making it an 8, like, and then yeah, if you can sell it at a 4, buy it a 4 and sell it a 4, yeah, dude, it works, right? But
Yeah.
are you going to be able to do that? I don't know.
We just bought a park in, June of last year, and it was one of the easiest. It wasn't easy because we ran into hurricanes, but at the same time, it turned into, um, just overall, like, we didn't have to turn over every resident that was in the park.
Mm.
We didn't have to, um the park was we had to add asphalt was the big CapEx deal. Is 110,000 of CapEx of asphalt. We I think the PVC fence was already done. It was and then there was some, there was very little. And then we're just raising rents to and then, adding some amenities like washer and dryer and stuff like that. It wasn't much, but it was overall, it was like an easy turnaround. And year one, we're pretty much done with all the major renovations. There's no issues. We're just operating as like a normal property manager would operate a park.
Right, right. What to you, what makes the value add like more difficult? Is it more projects, like more homes to rehab, more infrastructure issues to fix? Um, what do you think makes it more difficult for guys?
Yeah, so I would say just from so you and I have had experience with two different sellers, right? We have the I'll just say it, the Mockler seller and then the Williams seller. So
Yeah.
the two sellers, the Mockler seller, all of his mobile homes were actually in really good shape.
Mm,
Took care of them. Um, Literally, I mean, we had to do some work to them. Some of them had some ceilings and stuff that were caving in on one unit, but he didn't like. It was very hard to get into those units. He wouldn't let us in. Like he's like, "Oh, I forgot the keys. I can't get you in." And I'm And then, we ended up getting in, but it was like a surprise that these things were like, we were like, well, since he's not letting us in, we just have to underwrite that it's going to be 15,000 per trailer or per mobile
Mm,
home to fix up. And then we get them, and it was about 2 to 3,000. And then we got the other guy, and those, there's no way if you're selling them as is, nobody's going to live in them. And then a person that does buy them is a terrible resident. So you're kind of forced to pump money into it. Like in this case, some of them were like 20,000 a unit, and we're selling them for 20,000. So we couldn't like have any, I mean, we're spending money to just get rid of them, and it's not exactly the best way to spend your CapEx money, to put into mobile homes, because the banks aren't going to really care when you, after
yeah.
they're like, okay, well, what else did you spend money on? Not just besides the mobile homes, what else is there? And they're like, well, we just had to get these mobile homes situated for habitability, and now the rents are up. That's what we're telling them. And they're like, well, what about the infrastructure? And they're like, it's okay. you know
Yeah. So you think it's more on a like, hey, if you got a bunch of homes to rehab and you have to manage those projects and it takes time, it takes effort, it takes energy, you think that's really like what makes,
Variables.
yeah. Yeah.
I mean, because a construction crew, I
Ugh.
mean, if you have to redo the paneling on the inside, the roofs, the subfloor, then you got plumbing, electric, all this stuff that goes with it. You're going to want very qualified people to work for you, because if you have not qualified people, you're going to be getting even worse product, and you can't sell it. So
Yeah. Yeah. And this is where I think, new people like, so Glenn and I know how to do these value add projects because we've done them and probably screwed up the first few,
yeah,
right? And learned hard lessons. But like the construction management piece of it, and maybe you've heard me say this on here before, and the project management is a skill that I did not know that I needed to have when I did these deals in the beginning. And yeah, I think a guy asked me on the Q&A today, like, what's a big variable that people miss? And I didn't mention this about the project management, because when you buy a new deal, you're probably going to have to buy a value add deal, because you're not going to buy the four cap unless you're liquid as hell and you can just buy it and sit on it. And so you're going to have to deal with some of this stuff. And I think if you're buying, and I think you would agree with me, I'll let you elaborate on this when I'm finished here, but if you're buying that project, so just think about it. The our buddy in Lakeland, if we bought his project, but we lived in Oklahoma, how do you think that would go?
you'd end up losing, is what I would
You would
say.
lose.
You would lose. There's no
Yeah.
way. I'd question if we could do it.
Yeah. Yeah.
That
Yeah.
was why we both didn't buy it.
I know, right? I gave
We bought
after.
one of them. We bought one of them,
Yeah. Yeah. So
and
you're
I
going
mean,
through
it's a
that
great
right
park. It's a great park, and I actually really do like the park. And I already knew, like, I tell Garrett, I'm like, when this is done, this is going to be like one of my favorite parks. But it's still like, I mean, there's brand new construction. They're tearing down houses all around it. It's just so the location's going to make up for it. There's a Mercedes dealership like
now. Yeah.
around
I
the
know.
corner from it.
Yeah.
Yeah.
Yeah. Yeah, I think, like a project like that, you guys are here, you can take that on and you've had experience. I just think if someone new, like you got to watch and make sure that, you can handle a project like that in the beginning, because you can get screwed with contractors pretty quickly. They're very quick to screw you.
It's almost guaranteed.
It is. It is.
It's
I think it is.
we follow very closely to our guys. I mean, we have to be on top of them, because it's like I talk to the office all the time, and like literally I said, you need, like, whatever that bill is that we just got, just deduct it from their pay, because it was like you could tell that it was like they're buying tools for themselves and stuff like that. And there's ways around that, but certain vendors, for us, we pay for the labor, and then we pay for the supplies separately. But those supplies can get out of hand and stolen. Of course, they can. You hear, like, I've heard just yesterday I heard about somebody selling cans of paint outside. They're like, we just, it's like, how are you selling paint and why? Like, and you pay these guys a lot of money. You pay them. I mean, I know I paid some of these guys. I mean, it's a handful. He's got a crew of guys, but one of the guys I pay like $500,000 a year, and you gotta stay on top of them. It doesn't. There's no loyalty, is what I would say. I know that sounds really bad, but it's the reality.
It's reality. It's reality. And I think now I will say this, I wouldn't let this like scare you from doing a deal, because if you want to do a deal, you're gonna have to go in and get beat up and figure this shit out. Like
Yeah.
I don't know what to tell you. Like you're just gonna have to figure this out. I would not be like, well, I'm worried about what Glenn and Derek said about the contractors. I'm not gonna put this deal under contract. If it's a great deal, go get the good deal, because you don't want to be the guy that's been in all the Facebook groups for the last 6 years commenting and has big opinions about mobile home parks and doesn't have a mobile home park. You don't want to be that guy. So I will say this is like, go do a deal, but just you need to be aware of this stuff that can happen.
So real quick about that, being like on the sidelines, wanting to make a deal happen. Because I actually was at this little event this week, and they were asking, "How do you get a deal?" And it's like, the deal is not going to be made in the spreadsheet. It's literally, you can probably figure it out on a napkin. And
For
if
sure.
you can get to a like, generally, me and Garrett will look at a deal, and you and I just talked about the one I just sent you. I was like, that was literally back of the napkin math, and I was like, oh, that's a deal. I was like, but then you get into due diligence, and then you look into seeing if the infrastructure is good enough to support what you're going to do. The infrastructure is the expensive part.
Yeah. 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 And look, I think you're right. Like, these parks are simple. Like, I can tell like within a second. I went and looked at a couple of deals, and I was driving back, and somebody hit me up with another deal. I went and saw it. I went in and I was like, I want this immediately. He gave me the price. I knew immediately that I wanted the deal, because there were certain factors, like the park was pretty nice, and there were some other things that I was like, I knew I wanted the deal. Yeah. Now when we get in due diligence, we may find out that the infrastructure is a disaster and it's like completely different. But everything on the surface, seemed to look good. You can spreadsheet this shit to death. I you can, right? Um,
You
but
could put a low exit cap rate to make it work or something, but it's like, what's it look like today?
correct. And that's a good point, because yes, you can make your exit cap rate low, and it makes the deal. Oh, you're like, oh, this deal's good. It's a 25 IRR or like a 2.5x equity multiple or something, right?
Yeah.
It's the like getting into the nitty gritty, like your exit cap is just, it affects the return metrics so much. And I think it's important to stay disciplined with that, for
Yeah,
sure.
definitely.
So, um, now when you look at a deal, Glenn, so I'm curious, is like, we talked about that deal beforehand, and I'm like, nah, not a deal for us. And you're like, that's a deal. So, like, what is it about a deal that lets Glenn and vertical equity say, hey, this is a deal, other than, you know, prostitution in the park and drugs and vacant homes and that kind of stuff? Just
We
curious.
also, I would say that we're probably, it's how you're situated also. Like for us, I don't know if you how many parks you have in that area, but we probably have like 4 or 5 in that location that kind of surround it. So it'd be like adding onto the parks. So I kind of see it as like, yeah, I mean, there might be a little bit of a mess to clean up, but it's like, we have the infrastructure, and that's the good thing is, when you
Mhm.
start, just like what we're talking about, you got to get started and get through the brain damage, and then you figure out what not to do next time. It's like, there's going to be some learning lessons, and then when you do talk to those sellers next time, you kind of see right through what they're saying. Like, take it for what it's worth, but really just, okay, we're just going to say that needs to be replaced. you know
Yeah. Yeah. Exactly.
I
And the
don't know if that
sellers.
answered your question, but that deal, it came out to a gross revenue. Like, they showed the gross revenue, and there's park owned homes, so I look at it, I'm like, okay, well, let's just not value the mobile homes, and just put them at the current revenue today, and what would the cap rate be once it's stabilized, and then It was like $1 million. It was a $2 million park that could be sold for 3 million. So I mean, just sort of rough numbers, and it could. And if you talk to other brokers, it could be 3.5 million.
Depends
It's
on who you talk to. Depends on
yeah,
who
we
you
don't
talk
know. Mark Samilichap 2.3.5.
to.
So
Six.
yeah,
Six.
yeah,
Yeah. No, no, it's interesting. And, as I mentioned before, it's like, defining um what your buy box is and what's good. Like for me, that one, like for the work that I know that park, by the way, and I've been through it, like knowing what I don't really like RVs that
yeah,
much either. Meh. They're not as sexy to me. And look, at that park and a big portfolio kind of doesn't matter if someone's going to come and buy your portfolio. Um, but for the work, the RVs, I know the rent's really low there, and it's like, I don't
yeah.
know, not that exciting. But it's clean park though. By the way, it's pretty clean. It's pretty clean.
I would also add that, like I said, my vision is different than your vision.
Yeah,
So that's why it changes. Like my plan is to ideally not ever leave Florida to buy real estate, and maybe that's risky, but at the same time, it's like I'm you, and I think that you're pivoting to move to the larger unit counts in the strong markets, which is obviously a good plan as well. So
yeah, yeah, yeah. I mean, look, I think I'd love to buy bigger stuff.
yeah,
Like, and it just depends on what your definition of big is. You talk to like, Blackstone, and they're like, oh, you're buying a small 300 unit park. Like,
yeah,
like it's small. They're only going to buy Fairways in Orlando. You know that place? It's like 1,500 lots.
wow,
Yeah, like one of the biggest in the U.S. But I think we still find a lot of value in 50 pad parks. I mean,
oh
for
yeah.
sure. They're still mom and pop owned and whatnot. But I wanted to ask you, why do you like Florida so much?
Mine's mainly like personal stuff. It's like I have, young kids, and I'd say like, do I want to get on a plane to um, go to work is really the question. And some, like I said, if your vision is different and you want to do that, then yes. But I already have a hard enough time traveling, so it's like when I to get on a plane to go look at a mobile home park. It's I have young kids just like you. I have a 3-year-old and a 6-year-old, so I'd rather just know I can go to a park and come home the same day.
Yeah, yeah. Well, what about from a market perspective, or is it not about market for you? It's just kind of
It's not
locale,
about
really.
market.
Yeah,
I mean, I'm sure there's better places. The Midwest, apparently, there's like everybody tells me that you can buy better deals in the middle of the country, and and then they always say it's impossible to buy mobile home parks in Florida, but you know,
yeah. Yeah, exactly. Yeah, because oh my God, how do you buy stuff in Florida? I'm like, well, my God, I know a lot of people that are buying in Florida. So it's not
yeah,
like it's just it doesn't happen. I mean, there's lots of groups. There's quite a few groups. I mean, not a lot, but there's a few that buy a lot of stuff in Florida.
let me ask you a question, because this is a question I actually ask a lot of operators. Like usually offline, this would be a question, but
Oh boy, we're gonna
um,
edit this out for sure.
yeah. At what point do you just start buying mobile home parks for like yourself? Like, yeah, I understand why you'd want to go out and buy them right now, but like, say somebody I've heard recently have a big deal go through refinance, and it sounds like that person never has to buy a park with anybody else ever again by the way that they exited. Like a very large, like a lot of money, 100 million.
Mhm.
And you would think, why don't you just buy parks on your own so you don't have investors? I mean, investors is work. You have to. There's risk to not really. I mean, there is risk to having the investors, but there's metrics, there's stress along with it. You're trying to really make sure that you're hitting those numbers. Why it always seems like even the guys that are way further ahead, 3,000, 4,000 units, they still want to continue to continuously raise money for investors and not just buy properties on their own.
So you're asking, why would you
Yeah,
want to
why
do
would
that?
you continue to continue to have investors when you could maybe start buying them on your own?
Yeah, I mean, look, it just depends on, like, yeah, if you got 100 million liquid, it just depends. Like, it depends on your target. If you want to buy 10 billion worth of shit, then yeah, you're gonna have to keep raising money, right?
Yeah,
And it just, it depends on your goals and what you would want to do. I mean, it's just, um, yeah, it just depends on that person. I mean, like, you get the $100 million wire into your account, like, I don't know what that feels like
no,
yet,
no.
but I'm sure it's like, oh wow, like, but I would imagine once you get to that point, you've had, a 5, a 10, a 20, a
You didn't
50,
need the
like,
money in the first place.
yeah, probably not.
And that's exactly what the person said. He's like, "I didn't need the money in the first place.
Yeah.
I was
Yeah.
already far enough along. I was making money, like, there's nothing to," but they contin they said, "Yeah, I'll still partner," you know?
Yeah. Yeah. I mean, I think it's just, maybe scaling and then, like, still a risk factor. I mean, at that point, it's like, if you're frugal, like, you're like, man, I want to de-risk myself on even this park that it kind of doesn't matter if I buy it cash 10 million, but you still like I think when I was on your show, I told you I was on the phone negotiating wire charges off with Bank of America. Like, it's
Yeah,
$15. Like, I don't need to do that, but for me, it's a big fucking deal.
yeah. Oh,
Like,
yeah,
and like all this other stuff and like little stuff like that. So I think it could be something like that too, where it's like you still want to de-risk yourself and not be just, crazy since you've got all this money. But what I've learned about money is that, when I'm like, man, if I had 100 grand in the bank, I'd be like just good. Oh man, if I had 1 million in the bank, I'd be good. And then when you hit these levels, it's like, okay, you just the thing it is like when you have 10,000 in the bank, you don't even see the things you could do if you had 100,000 in the bank, or the things you could do if you had 1 million or 5 million in the bank. Like, you can't see that level, right? So yeah, from the perspective of somebody that's working and making 50 grand a year, they're like, oh my God, if I had 100 grand in the bank account, I could just play Call of Duty all day, right? But they
yeah,
don't see, they're blind to like what you can actually do at that level, right? And so when you get to the next level, it's like, okay, well, now I can actually do something else, right? So
yeah.
I think it's a mix of all that stuff.
There's that line from Jim Carrey says, "I wish everybody could have, like, all the money they needed just to see that it's not gonna make them happy," you know?
Yeah. Yeah.
But,
And
as we were talking about it, actually, I was thinking about that the the other thing I've noticed is I do bring on some guys, and also just like you do, bring on a lot of mobile home operators. And I've noticed that the bigger money, not like bigger money like Blackstone, but like the guys that are 2,000, 3,000 units, I've noticed what they do is they find, you know, like guys like me or whatever to help them find parks, and then they just financially back them, and then that's kind of how they partner because they need somebody to have skin in the game to build out the portfolio, because buying those 50 unit parks you have to have somebody available, and you can't have enough you're not going to have enough revenue to pay somebody like 100,000 a year to manage a 50 unit park, because you're not going to make those numbers don't work. So to be
right.
able to scale, you have to, it's like almost like giving equity to those operators that are boots on the ground, just so yeah, they won't be making a lot of income, but they're driven by the equity.
Yeah. Yeah, for sure. Yeah, and I mean, it doesn't, if you get 5 or 6 50 lot parks, then you can start to think about affording somebody like a manager to manage all those, like a real manager, not Johnny in lot 16. Um, a real manager. And yeah, I mean, I see people do that, and people that are like scaling in the game that have a bunch of dry powder to go. That's what they're doing. Like they're coming
Yeah.
to guys like you or guys like me and being like, hey, you're finding deals and stuff all the time. Like, hey, we should partner. And we may end up doing some element of that at some point. Um, you know, we'll see. We'll see how it evolves here. So, well, I wanted to ask you. So, like, too, like, what are you up to now? Are you? I know you mentioned that you're just operating stuff. Are you looking to buy anything now? Are you selling anything? Are you selling anything?
Yeah. Everything's always for sale. I tell
Okay.
everyone that. It's like, what's the price? They're looking for a deal. I'm like, well, it might not be a deal, but it's still for sale. You know? And what I do is I send it to Derek, ask him for a ridiculous price. He tells me no, and then I sell it to somebody else, and then tell him, look, I sold it for the price, or maybe a little
Yeah.
bit less. But
Are you selling that one?
uh, it's we're pretty much about to go under contract.
Okay.
It wasn't for the exact price that I wanted, but
Well, of course not. Of course not. How much
it
lower?
it wasn't for the price that Derek wanted either.
Okay, so we were between. Okay, but it was
Yeah,
closer to your price.
closer to my price.
Yeah. Okay.
But yeah, so let's talk about your fund. I know you probably talk about it all the time on your podcast, but I've always liked it. So I guess I don't know how much you're willing to talk about, but so you're able to raise capital right now and
Mhm.
you're able to buy parks with that fund money currently. Is that how it works?
Yeah. Yeah, correct. And so we're raising the money. We're getting commitments now. We've already got like a pretty sizable amount of commitments because we have deals in the contract,
Yeah.
under contract. So it's not like a complete blind pool fund like people do, that they raise all the money and spend a bunch of time doing that and then go find deals. Unfortunately, yeah, that would probably be easier. But the point is that actually probably wouldn't be easier because, like, when I talk to investors now, it's like, hey, this isn't blind. Like, I have
Yeah.
these deals under contract and then we have these others in the pipeline. It's just so happened that how it is with these deals. You got to jump on them when they're there. If it's a
Yeah.
deal, you got to put it under contract and figure it the hell out. Right. Otherwise, if you wait, yeah, there's still going to be deals, but Glenn's going to go buy it.
Yeah.
And
They don't sit long.
they don't sit long. So you have to take advantage of that. And I think that's helped us here in the beginning. The fact that we've got a very robust pipeline of stuff and stuff already under contract going in the fund, that, it's investors like that. They like that.
How do you get, what about financing? So like, um, you don't have, I guess it's because it's registered. It's going to be, is the loan going to be like recourse or?
Yes. Yes. There'll be,
Yeah.
there'll be recourse.
So then
There,
when you do that, so then there, does the bank even ask about who's in the fund?
no, no, because I'm guaranteeing the loans. I'm guaranteeing the loans. And so if anybody's over 20 or 25%,
Yeah.
then yes, but I keep people at that level. So um, it's really just me at that point, signing on the debt, which, my other partner has started to do with us now. So it just makes it a little bit easier than it's always easier with two guarantors versus one.
Yeah.
Right.
Yeah. That's
And,
that's what I was thinking when you said it. I was like, wow, that's impressive. You're doing it by yourself.
well, it takes some, you kind of have to, massage the deals through,
There you go.
you got to massage the deals through. And it's a whole different, what people don't, like a lot of people teach the operations and all that shit, and people know that, but there's a whole nother side to this business, the financial aspect of it, that
Yep.
a lot of these guys that teach you operations don't know shit about, because they work with other people behind the scenes that like do that stuff, which is a whole nother thing. Like the raising capital part, the raising capital part and dealing with the banks and actually getting the deals through the banks and kind of working with that. It's a whole other beast to do that and figure that stuff out. And it's just another part of this game. Like it's just be hard to do by yourself.
So when you're trying to limit somebody to 20%, uh, say so you have we'll call it whatever you want to call it, a whale, somebody that's going to give you wants to give you more than 20%, but you don't know exactly how much you're raising because you're saying it could be between 10 and 20 million. How do you figure that out?
Yeah, so we haven't really ran into that yet. I mean, I've got a couple whales that I'm this actually it's a good question because this situation it's very likely to actually come up.
Yeah, it
And
happens all the time.
yeah, because we've been looking to get, commitments in and we're getting them in. And so more than likely we'll end up at closer to 20.
Yeah.
Um, and so I can kind of, I'm just going to have to play with it certain
Get some
ways
more
and see how
massaging going.
get some more massaging going, baby. There's always a solution,
There's always a solution.
as long as it's legal and as long as it's
Yep.
ethical and you're not, doing some shady shit, there's solutions for stuff.
And
Um,
always disclose. Always disclose.
yeah. Yeah. What do you mean disclose but to the
Anything, there should not be anything hidden is what I would say.
yeah. Yeah.
I'm not saying that's been my one strong suit when I work with investors because I'll tell them pretty much everything, and I feel like you're probably the same way just from our conversations that it's like if somebody doesn't tell me about the bad things, it automatically tells me they're lying to me. Like if everything's perfect, it's like probably going to be they're probably not telling me any of the truth then, you know?
Yeah. Yeah. And I try to like this fund, like I freaking just underpromise like so much on the returns, the distributions. I'm like, you're not going to get distributions for a year. Like you're not, the IRR is going to be, 15 to 20 when I know that really like, I'm
What
super
I would say,
sandbagging it.
let's talk about the distributions real quick, just because that's something that I've been kind of. I'll tell you exactly what I did wrong. Just to is that we used to pay preferred. We have preferred returns in our deals, and we pay preferred returns on day one. So like month one or whatever, 1 month in, 30 days in, on the 15th, we'd send a distribution check, and um yeah, it was like something that it kind of at the time it made sense, but I realized that you're actually strangling the deal when the distribution checks are going out early because the property is technically not profitable to be paying those distribution checks. You're
Correct.
cranking out capital into the property. And yeah, I mean, we'd like to say that we have set aside some capex money, but you just don't know um, what variable is coming up, especially in the first 3 6 months. And then you get to that 6 month mark and you got some renovations that you might have underestimated on, or a septic tank that came up. um, yeah, those are things that you obviously learn. But what I can tell you what we did on some of our deals is we actually stopped distributions into the deal later, which doesn't make a good experience for the investor.
Right.
They were like, "What? What? You were paying me distributions this whole time, and now you're not paying me distributions." So it was like, well, we don't want to go below a certain reserve amount, and we need to be prepared to have something else come up if it does. So, in my opinion, it's like like deferring the distributions, like for as long as possible, is actually better for the property, especially if you're in a fund, because you might be actually buying yourself a new property on the back end.
Correct.
You might get through all the funds, say you get through the 10 million and you didn't make any. And I'm not saying this is the case for you, but I'm just saying, like, if you didn't make any distributions, you might actually have an extra $200,000 to $300,000 left over to buy an extra park in there. Now you have this cash flow on this back end. You've bought 10 parks and they're pretty much almost stabilized, and you got to the end of your funds and you have either 300 that you would have distributed, or you could have just put it into another park on the back end, which you would
Yeah.
have a whole another park if you didn't make a distribution for those profits, you know?
Yeah. Yeah. Yeah, I mean that's a good point. And I actually that's why I try to defer the distributions. Like I don't try to do it forever, which I
Yeah.
agree with you. Like, in a fun sense, yes, but investors like the distributions.
Yeah.
Um, but yeah, I agree with you, and I think it's kind of a skill in itself, knowing when to start and when to not send a distribution. Like this last quarter, we had two properties that are like so close to like we probably could have pushed out a distribution. Maybe it was
Yeah.
borderline,
Yeah.
but I'm like, no, let's wait one more quarter. Let's make sure that we're fully there, like where I feel really good about the park, and then we can start pushing out.
I think I also, to add to that, is just we have to, for me, it's like we have to remember what we're doing. We're not, yeah, we're buying for cash flow, but the most important thing is protecting the equity.
Yep.
So it's like, and also growing the equity. So if we
Yep.
start distributing, then it starts to get a little bit tighter. We got to manage cash flows a little bit. I mean, they should always be managed tightly, but at the same time, it's like if we would have just really kept full throttle finishing up the capex to where we're completely done. Now let's go ahead and finish up this. Now we can make distributions comfortably, no issues, and then you start actually having windfalls in the
Yeah.
property, and that's when the return of capital really starts coming in.
Yeah. Yeah. For sure. For sure. What do you we were talking about investors and doing distributions and things, and like what do you think, cuz you were like, "Hey, you disclose everything to the investors." And I wanted to ask you this. Like what would be something that like most people wouldn't disclose to an investor that you would disclose?
So sometime it's like that thing that okay, I was talking about this the other day. Okay, so when the toilet falls through the floor in the mobile home, you don't need to tell your investors. But if every toilet in the mobile home park falls through the floor, you might tell them at maybe an earn just to let them know. You have to tell them, hey, we had to replace every subfloor to the trailers because they all are shot. And I'm not saying I've ever had that experience, but I'm just saying there's a certain amount of detail that to make them to keep them limited and to not like stress out over the details. But when it gets to explaining where the money's going, you should always have that disclosure. You like, okay, we underfunded. We bought a mobile home park, and like we got the septic tanks inspected, clean reports, everybody's good. Like a month or two in, they're like, "Oh, we have to pump the septic tank," and then the same guy that pumped the tank, he's like, "This tank is shot." And you're like, "What do you mean it's shot? You told me it was fine and you pumped it yourself." And he's like, "Oh, I didn't say that. It was this, this is what happened." And it's like,
Mm.
okay. So now you run into a $40,000 septic tank and it's I mean, uh yeah, so it's just like things like that. It's like you have to like that's something you don't want to tell your investors. You made a mistake, you missed maybe a septic tank. It's we ended up having to spend 40,000 on the septic tank. But at the same time, most investors that are rational business people, they're gonna understand. Like they're like,
Right.
yeah, I understand how that happens. And then generally, the feedback that I get is, thanks for the hard work, stuff like that, because they know it's not. There's a reason why they're giving us the money and they're not doing it themselves. So
Yeah, yeah. No, correct. And I think investors like they appreciate that level of transparency. And I agree. Like if you got to pump two tanks, like you don't need to like whatever. Like they're gonna see it on the P&L. But if you got to pump 20 or replace, a drain field and two tanks and another drain field, like yeah. I think it's important to disclose that stuff. And, I've gotten the same, general, okay, yeah, thanks for the hard work. Like, whatever. Some investors don't respond because they just, they put the money in and like, they're like, whatever. But, and it's fascinating to me, Glenn. I don't know if you've ever had this with any of your guys, but like, I've had so many investors that are like, "Oh, Derek, like I'm in so many others. I'm in 5 other syndications, and I never hear a freaking peep out of them. You're reporting like on time every
Yeah.
day. Like you send closing statements on closing. Like you're actually like doing that. I had one investor tell me like, you got RK1s out before I even got mine out to to my business partners, which is not typical in a syndication. And
I'm gonna have to talk to Michael about that. So, so one thing I was thinking of is something else that it's like as an operator, I think a big thing, and most people that are buying mobile home parks will probably have investors, is you have to kind of respect the money. It's if I think about what I had to save at American Homes for Rent, which I think I was a very high savings rate, and I was saving about $50,000 a month, or $50,000 a year. I'm sorry. And
dang, Glenn is
no,
just
that's how
he's
I
got
really got
cash
my
in the
wealth.
walls back there. He's got cash in the
So
walls back
so I
there.
put so that took me a year of my life to save $50,000. And if somebody's giving me $50,000, I think about the amount of work I had to do to save that $50,000 and how important it is. So whenever it comes to reporting, it's like, so I'll tell you an example. Like we had this park, same one that Derek knows, is we thought we were going to make distributions around May, and renovation costs were a little bit more than we expected. So then I reached out to investors and I tell them, hey, we're going to be holding off on distributions. It might be, you know, 5 to 6 months. Never good news, but I think what it turns into is then the communication has to be on like even more on point than a quarterly report. Maybe it's like a monthly report, because that's what I'm saying about like, you want to give them some information of like, this is where your distribution that I'm not giving you is being spent.
Yeah.
So it's like important to know like, hey, this is where it's going. And when you explain to people everything that's going on, it's a rational understanding of like, oh yeah, that's where the money should go. I don't need the money right now. I just want to take care of the property, get it to where it needs to go.
Yeah.
And that's why it's so important to have whether it's quarterly reports, and then if things are kind of going sideways, not expected, like what I was just saying, is then maybe it turns into a monthly report, that you're giving updates on where everything is.
Yeah. Yeah. And I think, what I do a lot of times too is that remind the investor of like, but we've had these one-time expenses that have prevented us from doing like, distributions and feeling comfortable about them, although the property's still making a little bit of money is via cash flow. But look at the NOI. The NOI has doubled from where we bought it, right? So the property's actually worth, double almost what we paid for it within the year. So it's like, I like to always keep some of that in perspective with them too. That yes, although we may not be sending a distribution right now, look where this property actually stands from an NOI perspective.
Yeah, I'm really excited about your fund and to see where it's going, because I just uh, it definitely makes sense, especially with mobile home parks. We're talking about a lot of infrastructure variables, and you could buy into a syndication and do all the due diligence, and something could come up, and it could be an expensive expense, and then you just tack that on to every single lot. But if you have a $10 million worth of capital going out to 10 parks or so, you're able to really spread it out, and also diversify the amount of risk that you're taking on when you're buying value add mobile home parks.
Yeah, yeah, for sure, for sure. Well, Glenn, it's been great having you on, dude. It's been great having you on. I mean, if you guys haven't tuned in to Glenn's podcast, The Millionaire Journey, are you on YouTube, iTunes, and all
Yep.
that?
Yep.
Yeah,
I'm
you should check.
generally easy. I'm on LinkedIn the most. If you message me on Facebook, it might take me a day or two to respond, but LinkedIn, I'm there regularly.
Awesome, awesome. Well, thank you all for tuning in to the MHP show, and we will see you all next week. Peace out.